Now we have to continue that question, right? You can take page number 11, dear.
Yes, ma'am.
Yeah. We were in which transaction, dear? Last class?
In seventh one.
7th finished, I think, right?
Yeah.
Okay, fine. So now we will be doing 8th one. As usual, you just write it down everything. Received rent from tenant rupees 1000. Now what is the meaning of this? Business is carrying out its work by taking a room for rent. So now business needs to pay rent to the landlord. But here what is happening? Received rent from tenants means business may have a room vacant. Now business is letting that room for any purpose. So now business will get rent. Okay, now business is the landlord in this question. It is extra income for the business. So it is letting its any vacant room to the tenant and business is receiving rent. It is not paying rent. Business is receiving rent. So it's extra income for the business. Now what will happen whenever business receive any interest or receive anything? It is income and it increases the cash balance. So what you will do? First you have to increase the cash balance here. So already cash balance after 7th transaction, if you see the new equation, available cash balance on the asset side is 24,500. Now this is the 8th equation. You can add 1000 rupees there in cash. And what about the capital? Whenever any income takes place in business, we have to add it in capital as well. So now you are going to add in capital. Already available capital is 20,000. How much? How much available capital is there? 2,02,500. 2,02,500 already available capital. There you have to add 1000 rupees. So after adding this, now what will be the new equation? If you add, then the cash will be 25,500. Bank remains the same, 75,000. Furniture building remains the same, 1 lakh. Plus stock remains the same, 44,000. Plus debtors 9,000 equals to creditors remains the same, 50,000. That's it. And yes, creditors remains the same. And what about the capital? Now the capital increases. And what is the new balance for the capital here? It is 2,03,500. How 2,03,500? Already 2,02,500 was there. When we add 1000, now the capital balance becomes 2,03,500. Is it clear to you, Janani?
Yes, ma'am.
Yeah. So now we will be moving to next. That is 9th transaction. Received security deposit from tenants rupees 1,500. Now what is the security deposit? Business is receiving security deposit. Suppose business is giving its vacant room for rent. A business is allowing. So suppose a tenant is coming, then business will say you have to pay me security deposit. Why it is taking the security deposit? Whenever the tenant will use the room of the business, and suppose after 2 years, 3 years, whenever the tenant wants to leave the room, vacant the room, like business will check whether all the lights, fans in the room are in good condition. If it is broken, then out of this security deposit, business will deduct, and remaining balance when the tenant leaves the room, it will pay. Like the business will pay the remaining balance. Suppose everything is in a good condition, nothing broken, nothing repaired, the tenant maintains the house or the room in good condition, then entire this security deposit 1,500 will be returned by the business to the tenant at the time of leaving the house or leaving the room. So are you able to understand what is the security deposit? Yes, Janani?
Yes, ma'am.
Now you have to focus on the treatment. Now how you are going to focus? Received. Whenever the word comes received, received means cash is increasing. We are receiving in cash. So you have to add that 1500 in cash, first thing. Then what about the second? It's a liability for the business. This is not income for the business. It is liability. Why it's a liability? Because in future, whenever the tenant leaves the room, tenant will ask the security deposit from the business, and business needs to pay this 1500 to the tenant. This is not the income of the business. So it's a liability. In future, whenever the tenant is vacating the room, he or she will definitely ask security deposit, and it's compulsory for the business to return the amount. That's the reason you have to show it in the liability side. So one more liability has increased. What is that? That is security deposit. Already creditor of 50,000 we were having in our business, one liability. Now one more liability, this security deposit has also increased of 1500. So always remember, if in your question the security deposit comes received, again you have to see whether it is received or paid. Again you have to focus. We are doing the question related to received. If it is received, that is the reason we are showing in liability. Just imagine if it is paid. It is also possible business may take a room for rent to running out the business activity. In that case, the landlord will ask security deposit from business. Then it is asset for the business. How it is asset? Because whenever the business will vacant the room, the business will get that security deposit from the landlord. And what in cash you have to subtract, because security deposit business will be paying. Are you understanding the difference between security deposit received and security deposit paid, Janani?
Ma'am, can you explain once more? I'm a bit confused.
Yeah, fine. See, just you have to do the opposite, dear. In here they are saying security deposit received. So you tell me, Janani, if security deposit received in cash, what impact you will write? What impact will happen in cash?
Cash increases.
Yes, if security deposit is paid by the business, then anything paid, what impact on cash? Yes, Janani. Anything paid?
Cash
Cash?
cash increases.
No. See, whenever any payment is made by the business, suppose business is paying salary, business is paying any expenses, then cash will increase or decrease?
It decreases.
Yes, same. If security deposit is paid by the business, paid, P-A-I-D, then in cash you will add or subtract?
It gets subtracted.
That's all. In the same way, now I am telling you that here it is received. Security deposit is received. So, as I told you, whenever the tenant vacant the room, he will ask the security deposit from the business. That is why it's a liability for the business. Whenever tenant vacant the room, business needs to pay the security deposit 1500 to the tenant. That's the reason in liability side you are adding security deposit, showing it as liability and 1500. Now think just opposite. Suppose the business has paid security deposit, first you will subtract from cash and it will become assets. Whenever business is paying security deposit, it becomes assets. Kindly write it down. Why it becomes assets if business is paying security deposit? Very easy. If business is paying, whenever business will vacant that room from the landlord, business will ask that now give me back the security deposit. Now the landlord will pay back the security deposit which was paid earlier by the business. Now you got it.
Yes, ma'am.
So you just write it down. Whenever security deposit paid, you have to subtract from cash and you have to show it in asset side. Whenever security deposit received, you have to increase in cash and you have to show it in liability side. So write it down. It's important and a new concept. It may come in your exam. So you should know the treatment, what you have to do. All these are important questions only, whatever I am teaching. Now next, 10th transaction. Purchased stationery for cash rupees 100. It is an expense. Whenever any stationery is purchased by the business, what is it? It is expense, normal expense of the business. You have to subtract from cash. From cash you will subtract how much? 100 rupees. Simultaneously you have to subtract from capital. Why you are subtracting? Because whenever any expenses takes place in our business, you have to subtract from capital. That is the rule. Whenever any income happens in the business, you have to add in cash and you have to add in capital. Purchasing stationery is an expense. So you have to subtract from cash, you have to subtract from capital. I hope you are writing everything. You have to write the new equation also. Are you writing, dear?
Yes, ma'am.
Yeah. So now after subtracting this 100 rupees, if you see the new equation, now the cash becomes how much? 26,900, bank 75,000, furniture building 1 lakh, then stock 44,000, debtors 9,000 equals to creditors 50,000 plus security deposit, one more liability 1,500. And if you see the capital balance, so previously it was 2,03,500. Now this 100 rupees expense you have to subtract, and now the capital balance becomes 2 lakh how much? 3,400. This is the new equation. After the what? After 10th equation, when you solve the 10th equation, after doing that, the new equation is this. Now we will be moving to 11th. Invested in shares, in bracket personal, rupees 50,000. Okay. Now what you have to do? See, invested in shares means whenever any business purchases shares of another company, it is asset for the company. Try to understand. Any investment in anything is an asset. So, but here what is written? Personal. Personal means business is making investment in shares not for business. It is making investment for itself, for personal use. So, it is drawings. It is not for personal use. And whenever drawings take place, we have to subtract from capital as per the rule. So, here also this 50,000 you have to subtract from capital. Now what about cash? If you see the cash balance, that is the available cash balance, it is 26,900. But the owner of the business is taking 50,000 from the business for personal use, for investing in shares for personal. Now from where the owner will take, because cash balance is less, only 26,900. But if you see the bank balance, it is 75,000. So you have to understand, if cash balance is less, then the owner will take cash for drawing from bank. Bank balance, enough balance is there, 75,000. From there the owner will withdraw 50,000 and purchase share, and it will be for his personal use, and it is a drawing. So you have to subtract from capital 50,000. Any doubt in this, Janani? This 50,000 investment in share for personal use?
No, ma'am.
Okay. Now then what will be the new equation after this 11th equation? Cash balance will remain 26,900 same, but bank balance will decrease. Previously it was 75,000. Now owner is taking 50,000 for personal use. Now the balance will be 25,000. Then furniture building 1 lakh, stock 44,000, debtors 9,000. Asset side complete. Liability side, creditor 50,000, security deposit 1,500, capital was 1 lakh, 2 lakh 3,400. From there you have to subtract 50,000, drawings for personal use. Now the capital will be 1,53,400. This will be the available capital after 11th transaction. You have any doubt so far, Janani?
No, ma'am, I understood.
Okay. Now we are moving to 12th. Received interest in cash rupees 200. Received interest in cash. Again, whenever the word comes received, it means an income. What the business is receiving? Interest in cash. So interest is an income and business is receiving in cash. You have to increase 200 the cash balance. Since it is an income, so you have to add in capital 200 rupees. Now what will be the new equation after 12th transaction? Cash will be increased by 200. So 27,100. Bank 25,000. Furniture building 1 lakh. Then stock 44,000. Debtors 9,000. Same you have to write. Plus, write everything as it is. Liability 50,000 plus security deposit 1,500. But capital will change because 200 you have to add in capital as it is income for the business. Now the capital will become 1,53,600, the new capital balance. Till here any doubt, dear?
No, ma'am.
Okay. Now we are moving to 13th, 1-3. Introduced fresh capital rupees 25,000. Now what is happening? Owner of the business, he is bringing more capital into the business. How much? 25,000. Whenever the owner of the business brings more capital, it is what? It is known as additional capital. We can call it as additional capital introduced during the year. So now what will be the impact? Cash will increase by 25,000. Capital will also increase by 25,000. So this will be the impact. So just you add in cash 25,000, then add in capital 25,000, because you have to do the same treatment when you did like whenever the owner starts any business, he invest capital in the business. Then what we do, like he started business with cash 1 lakh. What you do? You will add in cash 1 lakh, you will add in capital. The same treatment you will do whenever additional capital is brought by the owner into the business. Here additional capital is brought by the owner into the business. That is the reason in cash you are increasing 25,000. Simultaneously capital also you are increasing 25,000. What will be the new equation? Cash will increase by 25,000, so there will be change in cash. New equation will be 52,100 plus bank 25,000 plus furniture building 1 lakh plus stock 44,000 plus debtors 9,000. Asset side complete. Equals to liability, creditors 50,000 plus security deposit 1,500 plus there will be a change in capital. 25,000 you have to add in capital. So now the capital becomes 1,78,600. This is the present capital of the business. Now 14th. Any doubt dear? You want to ask anything? Any doubt?
No, ma'am, I understood.
Okay. Now the 14th. Goods destroyed by fire, rupees 500. There is a loss. Goods, it was kept in the godown. Now due to some reason, like due to fire, not entire goods worth 500 rupees was completely destroyed. Now what will be the journal entry? Whenever goods are destroyed due to any reason, it is a loss for the company. Always it's a loss. It may be due to theft, it may be due to accident, it may be due to this fire, but it is a loss for the business. And what you have to do, you have to subtract from purchases, because whatever goods are purchased, like stock, I'm sorry, you have to subtract from stock. Whatever goods are purchased by the business, it is known as stock, and those stock are kept in godown. From there 500 rupees worth goods were destroyed. So definitely you have to subtract from stock 500 rupees. 44,000 stock was there, and 500 destroyed by fire. You have to subtract 500, and whenever there is any loss in the business, you have to subtract from capital. So you have to subtract 500 from capital. You can write it down as important note. Whenever any loss in the business, you have to subtract from this capital also. Suppose loss of cash, then what you will do? Suppose cash destroyed by fire, then you have to subtract from cash. Here it is goods destroyed by fire. That is the reason you are subtracting from stock. Okay, understood?
Yes, ma'am.
Yeah. Now what will be the new equation after subtracting 500? This is the final equation, because after 14th there is no equation. This is a very good question, very important. All the important points are there in this question. Now final equation will be 52,100 cash, 25,000 bank, furniture furniture and building 1 lakh. Then stock, you have to subtract 500 from 44,000. So stock will be 43,500, plus debenture remains the, sorry, not debenture, debtors. Debtors remains the same, 9,000, equals to liability side, creditors 50,000 plus 1,500 security deposit plus capital. Capital also you have to subtract 500 since it's a loss. So now the new capital will be 1,78,100. This will be the final equation, and this is the solution of this big question. So any doubt so far you are having, dear?
No, ma'am, I understood.
Yeah. And Janani, I just want to tell you, coming Tuesday, I may not be able to take the class. Okay, I will send you the message. Suppose I forget, then because we are doing shifting, I am shifting my house from one place to another. So coming Tuesday, I may not be able to take your class. So Thursday, as usual, I will take the class. Okay?
Okay, ma'am.
Yeah. Now you can take page number 14, 1-4. This is also very important question. In your exam, this type of question they may ask. So you should know. Take page number 1-4-14, question number 8, and start writing also simultaneously. Have you taken PDF? Opened?
Yes, ma'am.
Okay, now what is this? Give an example of each. In theory, they may ask you, so increase in one asset, decrease in another asset. They will give in this, and they will tell you to give example. So how increase in one asset and decrease in another asset you can write? You have to write the transaction. Purchased goods for cash. Now how purchased goods for cash? See, whenever business is purchasing goods, what is happening in our accounting equation? We will increase the stock. Okay, we will add stock as an asset. Now stock is an asset, so one asset is increasing when you are purchasing goods for cash. Whenever goods are purchased for cash, cash is also an asset which is decreasing. So example of this, increase in one asset, decrease in another asset, you have to write purchased goods for cash. Whenever this transaction happens in the business, one asset stock is increasing, another asset cash is decreasing. I hope it's clear. Yes, Janani?
So it's like they give a question about increase or decrease,
Yeah.
and we have to write according to it.
Yes, absolutely. Chances are there. They may give you this type of question like this. I have given now increase in one asset, decrease in another asset. You have to write purchase goods for cash. So whenever this transaction happens, what is happening? Stock is an asset increasing. Cash is an asset decreasing. Understood?
Yes, ma'am, understood.
Yeah. Now the second. Increase in asset. Okay. Increase in liability. So this is also very easy. Increase in asset means which transaction, if happens in business, will increase one asset and will increase one liability. Meaning of this line. So purchased goods on credit. Now purchased goods on credit, how? Whenever we are purchasing goods on credit, stock is increasing, that is an asset. So increase in asset means stock is increasing, you will add in stock. And since you are purchasing for credit, you are not making any payment, so creditors will also increase. Creditor is a liability. So purchase goods on credit means increase in asset, increase in liability. How? Stock is increasing, which is an asset, same time creditors are increasing, which is a liability. Yes, understood, dear?
Yes, ma'am.
Are you writing everything?
Yes, ma'am, I'm writing right now.
Okay, dear. Now next. Third, increase in asset, increase in owner's capital. So you have to write one transaction or give an example of one transaction which shows there should be increase in asset and there should be increase in owner's capital. Started business with cash. This transaction, how? Whenever this transaction happens, started business with cash, what we do in our accounting equation? We increase cash, that is an asset. So increase in asset happens, increase in owner's capital. Yes, in the liability side, in under capital or below capital, you also increase that capital. So started business with cash, increase in asset, increase in owner's liability. Is it clear to you, Janani?
Yes, ma'am.
Fine. Now the fourth, decrease in asset, decrease in liability. Now decrease in asset, decrease in liability, payment to creditors. How? When this transaction takes place in business, what is happening? Whenever the business makes payment to the creditors, then what will happen? Cash will reduce. Then asset is reducing and liability will also reduce, because suppose the creditors are 1000 rupees. Business is making payment 1000 rupees. So what will happen? 1000 you will subtract from cash. When you subtract from cash, cash is an asset, it is decreasing. Simultaneously, you will decrease the liability. Creditor 1000 you will subtract. Now creditor becomes 0. So liability is also decreasing. So decrease in asset, decrease in liability. What is the best example? Payment to creditors. It is clear?
Yes, ma'am.
Okay. Now fifth one. Decrease in asset, decrease in owner's capital. Now for this, depreciation on asset. How? How this transaction? See. Decrease in asset. Suppose machinery. It is in the business 1 lakh rupees. And we are charging depreciation 10% on that. So by charging 10% depreciation on our machinery, what impact we will have in our accounting equation? From machinery, machinery is an asset. From there you will subtract 10,000 amount of depreciation. So value of the machinery is decreasing. So we can say asset is decreasing, and whenever there is an expense in the business, you have to subtract from capital. Charging depreciation on fixed assets is always an expense for the business. So from capital also 10,000 you will subtract. So we can say depreciation on asset whenever takes place in our business, it decreases the value of the asset, machinery for example. Simultaneously it decreases capital. Understood or having any doubt? Fifth one.
No, ma'am, understood.
Very good. This type of questions in your school you didn't do?
No, ma'am, they didn't give questions like this.
Okay, fine. Now the sixth one. Decrease in liabilities, increase in owner's capital. Decrease in liability, increase in owner's capital. Conversion of loan into capital. How? Sometime what happens? Decrease in liability, increase in owner's capital. Suppose I am the owner of the business. I have given loan of 1 lakh rupees to the business. Now the business should return me that loan after 1 year or after 2 years. So after 1 year, I am the owner. I will say to the business, you don't return that loan to me. What you do, you just make my loan into the capital. Okay, just convert the loan into capital. If by doing that, what is happening? If the loan is converted into capital, what will happen? Capital will increase in owner's capital, and loan is a liability for any business. That liability is decreasing. So decrease in liability, increase in owner's capital means conversion of loan into capital. Any doubt here?
No, ma'am.
Okay. Now next, 7. Increase in one liability, decrease in another liability. So, one liability should be increased, other liability should be decreased. Accepted bills payable from creditors. Now, what is this bills payable? Bills payable is a legal written agreement. Who will make this legal written agreement? The business will make. Suppose business has purchased goods on credit. Now the creditors sometime may say to the business, you just put your signature in this legal document where it is written that you agree to pay me the amount within 6 months or 7 months. So that is the reason accepted bills payable. Bills payable is a liability for the business. Bills payable means it's a liability. You can write it down if you don't know. Bills payable is a liability. Bills receivable is an asset for the business. You just kindly write it down if these terms are new to you. Bills payable, liability for the business. Bills receivable, assets for the business. So now what is happening? Increase in one liability. So bills payable, as I told you, it's a liability. So it will increase in the business. Decrease in another liability. Creditor, who are creditor? They are also liability. Now creditor you can remove, because initially what happens? We purchased goods from creditors, so liability increases. We showed creditor in liability side. Now what is happening? We are saying to the creditors, you just give us bills payable. I will sign in that paper. After 6 months, 7 months, I will make you the payment. So bills payable is a new liability created. Now this creditor you have to remove from the book. So one liability creditor is decreasing, another new liability bills payable is increasing. So increase in one liability, decrease in another liability. Understood dear? Are you understanding, Janani?
Yes, ma'am.
Okay. Now the last, increase in liabilities. Decrease in owner's capital. You have to tell one transaction due to which there will be an increase in the liability and there will be decrease in owner's capital. Outstanding expenses. So outstanding rent, outstanding interest, outstanding salary, all these are liability. Now how you will show this? You have to show in the liability side. When you show outstanding expenses, it increases the liability. And whenever outstanding salary, outstanding interest, you have to subtract from the capital. Why? Because outstanding rent, outstanding interest are all expenses of the current year. Business has taken or received services, but business didn't make the payment. So expenses have become due. Business needs to make the payment. That is why it is outstanding. So you have to subtract from capital, because what is the rule? Anyways, whether cash paid or not, if any expense happens in the business, takes place in the business, you have to subtract from capital. That should relate to the current year. That is the reason outstanding expenses always we subtract from capital and we show it as a liability. So increase in liability, decrease in owner's capital, outstanding expenses. Understood, dear? Have any doubt to be asked? Yes?
No, ma'am, I understood.
Yeah, fine. Just a moment. Calculation of assets, liability and capital. Okay, there are some formula based questions in your accounting equation. So these questions you should know. For that, some small formula you should know. With the help of those basic formulas, you can solve those type of questions. Now what is that? Assets equals to liability plus capital. This is the basic formula which you should know. So assets equal to liability plus capital. Suppose for example assets capital are given, liability easily you can calculate by using this formula. If liabilities are given, then assets minus capital equals, like any, what I am saying, any two item will be given and one item they will ask you to calculate. So by this formula, if possible, you can do it. Now what is the other formulas? Profit equals to revenue minus expense. So what is profit? Profit equals to revenue minus expense. Profit, revenue both are different. For example, whenever business sell its goods, whatever the money business earns by selling the goods, it is revenue. Revenue means income. From that income, business needs to pay expenses. For example, salary to staff. If the business has taken room to run the business, then rent to the landlord. Then if any like cartage or any stationery expenses, all these expenses are met by business only out of the revenue. After subtracting these expenses, whatever left with the business, that is profit. So profit and revenue both are different. They are not the same. But normally what we say, if any goods are sold to customer, we call it as profit. Actually, in real, it is not profit. It is just a revenue. From that revenue, business needs to pay many expenses. After making payment of those expenses, whatever finally left with the business, that is only profit. That is why the formula profit equal to revenue minus expense. Got it? Yes, Janani?
Yes, ma'am.
Are you writing everything, dear?
Yes, ma'am, I'm writing.
Very good. Now the third one. Profit is added to the capital. You know, whenever profit takes place in business, we add in the capital. Now the fourth. Capital is also known as owner's equity or net worth. Sometimes they give you like net worth or owner's equity. So you should not get confused. The other names for capital are owner's equity or net worth. So capital is also known as owner's equity or net worth. Now the 5th. Financial year, that is also basic, from 1st April to 31st March. Now the 6th one, closing capital equals to, this is again important, all the formulas write it down. Closing capital equals to, what is the formula? If in question you have to calculate the closing capital, opening capital plus additional capital minus drawings plus profit. You should know all these formulas. So what is the formula for calculating closing capital? Opening capital. Opening capital means capital of 1st April. That is only opening capital. You have to add additional capital if in question. If it is not there in question, you can just write 0. Minus drawings. Drawings, you know, whenever the owner takes money for personal use, plus profit. Profit, if given in question, you have to add. By using this formula, closing capital you can calculate if asked in question. Then what is the next formula? Profit. Sometime you may need to calculate profit also. So for that, what you will do, how to do that calculations? Profit equals to, again there is a formula. You should know each and every formula. Then only formula based questions you can solve it. So profit equal to closing capital plus drawings minus additional capital minus opening capital. Closing capital means capital given on 31st March. Drawings you know. Additional capital also you know. Opening capital means capital as on 1st April. So these are the formulas which you should by heart. If you know these formulas, then only you can solve the formula based question. So formula based questions have been taught in your school?
They only thought the asset is equal to liability plus capital, but then they didn't teach how to do profit with revenue and expense.
Okay, fine. But the questions are there, like formula based questions are there.
No, I don't think so. They just gave the formula just to write it down, but they didn't teach us.
Okay, no issue. But actually in 11th in your syllabus this is there. Okay, formula based question is a part of syllabus. So in the next class, that is I think I won't be able to take on Tuesday, but Thursday definitely I will take the class. So Thursday we will move to this. Once we finish this formula based questions, then what we will be doing? After finishing this, we will move to rules of debit and credit, then journal entry, and we will go as on. Okay.
Okay, ma'am.
Now in your school, which chapter they are teaching, dear?
Now they started ledger.
Ledger. Okay. Journal entry finished, rules of debit, credit, everything. So you are understanding everything in your school?
Yeah, the journal I understood. Only they recently taught GST, SGST. That one I didn't understand much.
Okay, GST. Okay. Goods and service tax. Okay, fine. No issues. We will be doing everything till here. Practice all the questions. Okay, dear. Whatever it's in your book, try to do each and every sums. Be thorough. In the next class, we will finish this and we will do with rules of debit and credit. Okay.
Okay, ma'am.
Yeah. Thank you, dear.
Thank you, ma'am.
Yeah.
Bye, ma'am.
Bye, dear. Good night. Thank you.